Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at another 5 different companies that are in the Dow Jones Industrial. And now a lot of you have joined the channel recently, and I'm just going to explain very quickly what's going on here. Now this, what you see here, is my portfolio, £71,000. That's money that I've received from my work and actually invested every single day, every single week. Whenever I get extra cash lying around, I always put it into the stock market. I have an ISA account with Trading 212. If you live in the UK, okay, and you don't have an ISA account and you're doing stock markets, then you're doing it wrong. Because ISA accounts are a really good way of making sure the government do not touch your gains, okay. The government gives you £20,000 to invest in an ISA account, and that means they will not take any money from you in terms of capital and gains as well as the dividends. And that's really good thing. So if you do not have one of those, just go and get one for yourself. Trust me, it's really good, right? And I have been doing this for 3 years now, almost 3 years. And every single year I've maxed my ISA account, and I'm planning to do that InshaAllah this year. You can see already I've spent about almost £2,700 just since April, beginning of April. So if you would like to join the Trading 212, I think there's a waiting list now, but I think they are taking people. So use the link on the description below and obviously get yourself an account. Now, this is real money, okay? This is not something that I'm basically making it up or anything like that. This is actual real money. Every single stock that you see in here have been here for quite some time. Some of them are very new and so on. So if you're new here and you have any questions or you're not sure what's going on or you're learning about the stock market, just again, join us in this journey. InshaAllah, my plan is to kind of educate Muslims wherever you are and help each other when it comes to the stock market, because there's so many things going on. And please, brothers and sisters, do not get into this penny stock situation. I met with 2 of my close friends recently, and I knew one of them does like this penny stocks or whatever, and they showed me there's one stock. We were at the gym and literally they showed me one stock that was, as soon as the market started, it went up 177%. It was a penny stock obviously, but it went that much. By the time we finished, it came out the session, it was down already. And this is kind of ridiculous. What I'm trying to do here is buy quality companies, okay, that have been around for a long time. Some of them has amazing free cash flow, amazing businesses that we know, products that we buy on daily basis, not some pharmaceutical company that just said, oh, they're going to sort out everything to do with cancer, and then the stock goes to the moon and then back down again in like 5 seconds. Please be careful with these type of things. If you're new to the market, maybe just buy an ETF. That's just advice from me, okay? I'm not just giving you financial advice, but I'm just saying, just look into buying an ETF. You've got hundreds of companies in there that rather than just buying individual stocks, while you learn about individual stocks. I prefer individual stocks. That's just me, obviously, but you need to do your own research and find out, okay? If you haven't joined us on the Discord by now, do that please, because if you join us on the Patreon account, you get access to the private Discord where you can, meet like-minded people, InshaAllah, and you get access to all of these things. So if you haven't done that already, please do so, because it really genuinely helps the channel. Right, let's now look at the 5 companies that are in the Dow Jones Industrial. Okay, this is part 2. We've done part 1 yesterday or day before, and we're doing part 2, and then we've got part 3 coming up soon, InshaAllah. So let's do the first thing we're going to look at today. First company we're going to look at is Chevron. All of the companies are in this basically indices is actually they are profitable companies, have been around for a long time, and they have one thing in common, and that's when they do have a lot of cash, okay? Majority of them anyway. Maybe there might be 1 or 2 that's still struggling with cash, but majority of them do have free cash flow. Majority of them pay dividends and so on. So Chevron is one of the companies in there. $297 billion market cap, has a narrow economic mode, and price right now is 156. I remember when this stock was about in the 60s and 70s, genuinely, and look at it right now, 156. I like this stock, but I can't buy it at this price, knowing that what it was not long ago. And dividend yield right now is 3.86. Latest increase is 6.3, and 5-year growth rate of 6%. The payout ratio is just genuinely nice, only 30%. Dividend streak of 35 years. So this is a dividend aristocrat. Annual payout. By the way, aristocrats are companies that have increased their dividend for 25 years or more. Kings are 50 years or more. Annual payout, you get $6. Safety is 90% according to Simply Safe dividend, and profit margin 15%, return on equity about 22%. Free cash flow is $35 billion. Okay, which is actually huge. $35 billion, Mike. Basically, some companies are not even don't even have that market cap, let alone having a basically that much cash lying around. Total returns from in the last 10 years, we're looking about 5%. Next year, it's basically expected to grow about 6%. And then obviously oil is going to decline at some point. If the oil prices keep going down, then obviously the outlook for these companies will basically be down a little bit. And the analysts are right now saying the oil prices will come down. And for that reason, this company will see some sort of a revenue decline in the next couple of years. But only who knows what might happen. Okay, Morningstar is saying it's about 3% discounted right now. $163 per share is where the price should be. Now, looking at one of the things that we're quickly going to look at is that revenue. So just to see where it's heading. So right now we're here, and then there you go. That's the decline. So like they're expecting a revenue of $237 billion they had last year, and they're expecting to about $205 billion basically next year. But the year after that is also again little bit of a decline. And in terms of EPS, obviously that again, those 2 years they're expecting to basically the earnings to decline. Right, carrying on, J&J is the next company. J&J has done a split recently. Okay, I'm just waiting what might happen with that situation. But right now it's 450 billion market cap. It has wide economic moat, $160 per share right now. Dividend yield of 2 points, almost 3%, 2.96. Will be interesting to see what happens with the dividends. I haven't read much about it recently. I'm just waiting for the other company. Convey is actually already trading as well. So we'll see what happens when they do basically when the whole process is finished. Latest increase is 5.3 and 5-year growth rate of 6%, which is good. Anything above 7%, I'm actually cool with it. Payout ratio 44%, dividend streak of 60 years. So this is one of the dividend kings, if you like, and one of the best ones out there. Annual payout $4.76, safety 99%, profit margin 13%, return on equity 17%, free cash flow of $6 billion, and total return in the last 10 years we're looking at about 9%. Next year the earnings, they're expecting the earnings to grow about 3%, then 4% every year after that for the next 5 years. 2% discounted right now, $164 per share is where the price should be. And looking at the stock details right now, you can see here, let's go into the year to date. You can see it's about 9% down year to date so far. And looking at the buys and sells, as you can see, and Seeking Alpha, you can see there's 5 buys, 2 buys here, and 13 holds here, and then 10. So basically, this is the analyst that looking at from Seeking Alpha, and this is Wall Street. Okay, so 10 buys, 7 holds there. And looking at the revenue, you can see it's heading the right direction. This is what you want to see, consistency as well. And looking at the basically EPS is also heading the right direction. So again, great company. And one of the best out there in terms of dividends and so on. Merck is another company that I own, pharmaceutical company, very similar to J&J, obviously. It's a pharma company, 297 billion market cap. Okay, it actually has the same market cap, funny enough, as Chevron. Moat, and it has a wide economic moat, $117 per share right now. I was buying this company when it was actually in the 80s or 1.70 something, I think it was at some point. Dividend yield of 2.5, latest increase of 5.8, 5-year growth rate of 8%, 42% basically payout ratio, 11 years of increase in that dividend, 2.92 dollars of annual payout, safety 99%, which is absolutely the highest you can get, 22% of basic profit margin, 28 almost 29% return on equity, $11 billion in the of free cash flow right now, 11.83% of the total return in the last 10 years. Next year they're expecting the earnings to grow basically 21%, then 8% after that. It looks like it's actually expensive right now because they're expecting about $97 per share, but right now it's $117 per share. And as you can see here, year to date is about 5% up, but for 1 year it's actually up almost to 29%. And looking at here, 13 strong buys, 6 buys, 8 holds here, and then 1 strong buy, 3 buys and 6 holds when it comes to Seeking Alpha. The revenue is heading the right direction, but just there is a tiny bit of increase, and then obviously increases a little bit more in the following year. So but it is heading the right direction. That's the most important thing. This company has loads of different drugs, and each one of those companies brings in about $1 billion every single quarter, which is quite amazing if you think about. So they have loads of products, but the Keytruda is one of their main ones. Next one is Microsoft. You know the company, $2.3 trillion market cap. Wide economic mode, $308 per share. Dividend yield of almost just like 1%. Latest increase of 10%. 5-year growth rate of 10%, 28% payout ratio, which is very low, so they have got room to improve that, and they have increased it for 12 years. $2.72 is what you will get every share of this company that you own. 99% safety, 33% profit margin, return on equity 38%, and it has amazing free cash flow of $57 billion. If it basically Activision Blizzard deal goes through, that's probably what they will use. Total return in the last 10 years, you're looking at about 26%. That's one of the reasons I actually invested in this company, is the total return in the next whatever years, not just the dividends. And 13% growth this next year, and then 11% every single year after that. Again, this is what the analysts are expecting. So again, that's expectation, estimation, whatever you want to call it. So obviously be careful with that. In terms of Morningstar valuation, they're saying it's about 5% discount right now. $327 per share is where the price should be. As you can see here, a year to date is up 29% and 16%, 28% for the last 6 months and so on. And in terms of buys and sells, Seeking Alpha is actually saying, analysts are saying about it's a buy right now. 4 buys, 4 strong buys, 18 buys, 10 holds and 3 sells. Strong buys 30 for Wall Street, 15 buys for Wall Street, and 6 basically holds and 1 strong sell. They must hate the company that much. So there we go. Again, in terms of revenue, it's heading the right direction, and in terms of EPS, is definitely heading the right direction. And I think the price went up so much because the AI situation that's going on at the moment. Next one is Salesforce. Salesforce is one of the companies I used to own in my portfolio. I've sold it not long ago. 198 billion market cap. It has wide economic moat. Current price is $201 per share. They don't pay any dividends, but I wouldn't be surprised if maybe in the next 5 years if they start paying it. This is now become a mature company. In 2020, it actually joined the Dow Jones, and at the time I think it was Exxon that was removed, as well as Pfizer. Those 2 companies were removed, and this and another company I can't remember was added in 2020. So that was interesting. Profit margin right now is almost non-existent there. Return on equity, remember this is still a growth company. Free cash flow though is a really good $6 billion. Total return in the last 10 years, we're looking at about 16%. Next year they're expecting about 15% and 25% earnings growth, and then 18% after that. 18% discounted right now. $245 per share is where the price should be. Now, again, another great company. I mean, one of the best out there, but at the moment, obviously, they don't pay any dividends, and they obviously, in terms of shareholder returns, it's almost non-existent because they dilute your shares and all of that stuff. So we will see what happens in the next couple of years. And looking at Seeking Alpha, a year to date is actually up 50%. Okay, that's why I've eventually managed to sell it, because I was down quite a bit at some point. And according to Seeking Alpha, analyst is actually a buy, 5 buys, 5 strong buys, 4 buys, and then 7 holds. 23 strong buys when it comes to Wall Street, 12 buys, 10 holds, and 1 sell. Now, a revenue beautifully growing. Okay, looking at the annualized EPS is also heading in the right direction. That's probably why a lot of analysts are expecting this to massively grow in the next basically 5 years or so. There you have it. That's the 5 different companies. That's the Sharia compliance side of things. Like I've always said to you guys, Microsoft is the only one that's questionable, but I don't think that we're there yet with Microsoft. When it comes to advertisement, which is the only reason why Zoya gives a questionable, is because of the advertisement. It's not there yet. Maybe once Bing becomes this huge AI thing, then maybe we will see a change. But right now, I'm definitely comfortable holding this company. I don't think that's the case until they convert that percentage to dollar amount, then we can see it and so on. But right now, it's very difficult to break down their kind of revenue in terms of that. But the rest of them are absolutely fine. And again, because I'm investing in these companies doesn't mean you should invest there. Okay, I don't own any of this but I own J&J, Merck, and Microsoft. I don't own Salesforce and Chevron at the moment. Okay, but I did own them at some point, especially Salesforce and Chevron. I think I had it for a few weeks and then I sold it not long ago. Not in this portfolio, the family portfolio. Right, that is it for the day. Inshallah, I will share with you guys more videos to come. Inshallah, if you like this type of content, please like the video, subscribe to the channel. Let me know if you have any questions. Sign up for Trading 212 ISA account if you live in the UK and so on, maybe some European countries, and then join us in the Discord. Please help us with the with signing up, and you get loads of the different things, and you can join us on the Discord. Inshallah, have a wonderful day. Assalamu Alaikum.